Stock market today analysis for November 28th, 2022. We got the Nasdaq down 1.58%. S&P 500 down 1.54%. U.S. Treasury 10-year up 0.2 basis points. Gold down 0.84%. Bitcoin down 2%. Oil up 0.75%. Earnings, they're still coming out. It's just like nonstop. Maybe it will be nonstop. You know, honestly, I never paid this much attention to earnings. I only paid attention to a couple companies, and that was about it in the past. But just these earnings keep coming out. So, you know what, again, whatever it is your trading style is, if you need to pay attention to the earnings reports, go ahead and do that. Let's take a look at the VIX. VIX up. VIX up today. Closed around, what was that, around 20 something. Looks like, is that 20, let's see. Closed at 20.5 on Friday. And today popped up 22.2. Let's look at this testing the strategy that I've been doing, which is basically a trade based on the VIX. Now, right up here, right now, there's a link that you can come back to at 1 minute and 42 seconds, 43 seconds, somewhere in there. You can pause this and watch that video, or you can come back and watch it later where it explains that trade more in detail. But it's basically a volatility trade using the VIX. In Apple, our total profit, which forgot exactly when it was open. You have to watch that video. But the total profit right now is at $285. Amazon, total profit at the moment is -10. Citibank, $50.50. Coinbase, in the red by 30 bucks. Intel, in the red by 50 cents. Microsoft, profitable by 150 bucks. Netflix, profitable by $262.50. Nvidia, down by $2.50. SoFi, profitable by 50 cents. SPX, looks like it's profitable about it's about 300 bucks roughly. This one doesn't really have much to do with this volatility trade. Either actually did coin, but looks like this. So here I shorted one share of stock that's in the red by a little less than 30 bucks, and this credit spread is profitable by about what is that, 20 bucks or so. Tesla, in the red by $360. As I mentioned, you can go back to about the 1 minute and 42 second mark when this video is over and watch that link so you can get a better idea of how the strategy is as I test it out over time. So let's get on with the show. MMRI down a little bit more today at 244.6. So right now we seem to be slowly creeping back down. You know, this orange from 200 to 300 is the high risk range, and earlier we were up almost into the extreme risk. So as this risk keeps coming down, I mean, stocks might go up, and this has been fairly accurate. There's been times where I saw stocks drop considerably, but this MMRI remained in the green at that time. It's been out about 2 years, I think. And so it used to be down here in the green. Stocks, one time I remember stocks dropped considerably, but this remained in the green. And shortly after that, you know, it was a big, this made it, after seeing that, I'd be pretty comfortable with of doing the buy the dip type of thing. Now, at the moment, in this high range, I'm not sure if I would feel like doing buy the dip. Depends on the situation. But definitely when it was in the low, it showed me that it was pretty accurate to do a little buy the dip. This is made up of the 10-year treasury, the Dixie, which is the USD, US dollar currency, compared to other currencies, and then for some reason divided by 1.61. I have no idea why, but that's what it is. And here is the 10-year treasury. In fact, here is a few different treasuries, and overall we see that we see how are they going. Okay, so got the 13-week up a little bit, 5-year up a little bit more, 10-year up a little more than that, and the 30-year down a little bit. Now, a couple weeks ago, a month ago, somewhere in there, you see this 52-week range. All these were like pushing to the 52-week range, and so over time, since I noticed that, I don't know how long that was, a month and a half, whatever it was ago, but the longer dated ones started going down, and so now we see this. So we see, I don't know if this is you know, just happenstance at the moment or what, but we got the 30-year, which is reducing lower, right? And then the 10-year a little bit, not pulling back as much, and then the 5-year not pulling back as much, with that 13-week still to that high range. And then when you have this 13-week, or you get to listen to these macro guys or learn some, get those more macro stuff worked out, but they basically talk about this inversion of the yield curve. And what they're talking about is that when these shorter term rates are higher than these longer term rates. So for example, you know, this 13-week is much higher than this 30-year. So, you know, your risk of lending somebody money for 30 years is greater than 13 weeks, but yet the amount of interest on that is much higher. So that's indicating some sort of potential problem. I think it indicates some sort of just like bad economic stuff coming down. Some people would say recession, but the word recession is like being redefined nowadays. So a lot of words are being redefined. So whatever word you want to use to name it, you know, bad stuff. So, you know, we see here the 5-year getting more than the 30-year, and kind of down the whole line there, except for right now the 10-year is a little less than the 50-year. But I don't know how to trade this. I've been listening to these macro guys for a while. I hear them talk about it and yada yada, but I don't know a direct trade with it. Maybe somebody else does. Let's look right into the stock market. So we got the S&P 500. This is doubled up for some reason. That's not the S&P 500. That's H&R Block. We got the S&P 500 right today. No, that is not today. You notice, look over here when I hover over this. There's today. There we go. So last week on light volume, S&P 500 got close to this 200-day moving average, and boom, was rejected down. Right, volume really, is that today? I think that's Friday's volume. Tell you what, these pro charts, they really lag during off market hours. We still got this strong uptrend with the weekly, but a little bit of this pullback, and nonetheless, we're still in this uptrend since about the middle of October, right? Low, higher low, higher low. It's basically, you see, it's been going up. It's above these two moving averages, but not able to get above this 200-day moving average at the moment. And ooh, look at that. Volume really popped up today, didn't it? Right? We had light volume, a little more volume on Thursday, Friday, or that was must have been Wednesday, and then Friday, real light volume because it was a shortened day. And then today, boom, selling came in. How about the technology sector? Technology sector, see the same thing, a drop. And why are we looking at this? But by the way, in case you haven't seen it in some of those other videos, these ETFs that we're going to be looking at right here, these are sectors that make up the S&P 500. So in a way, like since I looked at the S&P 500 first, we see it dropped. We're probably going to notice a lot of these sectors have dropped for the day. This makes up like around 23-24% of the S&P 500. So whatever this is doing, has a lot of weight on whatever the S&P 500 is doing. So we see that same thing. It's been a volatile uptrend, but low, higher, low, higher, low. It's really been in the sideways here, and we got a bit of this like M formation, right? Here's a top, kind of a double top like that. We didn't really get a head and shoulders. There's no head sticking out here. It's more of like M, right? M. So could be that we're gonna see more. I would say like wanna see if it's gonna stay. Right now it's in the bottom of this range, right? Here was this little range it was in. So it's gonna fall back into here. We got a lot of support in here. So maybe it could pop up in the morning. We'll see. Whole technology sector has been weak. Now, healthcare. Healthcare has been one of the stronger sectors. And we see we got a much stronger trend going up with less volatility, even though we had some sideways action in here. Over all three moving averages, that is from Friday still to see. You notice though, look at that decreasing volume, right? What day was that? That was Monday, Tuesday, Wednesday. And selling volume came in today, not as much as on the S&P 500. And something else that is good to look at is look at the shadow up to the top here. Take that off. Look at this, traded all the way up here. The selling pressure pushed this down. Now, it could be just could kind of like be one of these where it's going to digest and shoot up. If any sector is going to do that, it's probably going to be this one. But let's see what's happening. It's getting a little bit extended over here, but it could keep going. It could keep going, not up because it doesn't have room, but it could go sideways up through there. But there's a lot of funky stuff happening outside of the world lately. So the financial sector has been relatively strong, not as strong as the healthcare sector, but it's been stronger than the technology sector. As we look at consumer discretionary next, you see it's been stronger than that. It was a little bit in this little range here. There we go. That took a minute. Now it's still in that range right there. Look at that. Just sold off. So really kind of range bound for the last like 2 weeks. We're above that 200-day moving average, which is good for if you want it to go up. What are we looking at here? Up, down, up, down. Could that be the beginning of an M? We'll have to see what's going to happen tomorrow. This volume candle was from Friday. Real weak volume. So this is the average. This is the average volume line. You see it wasn't able to hit it. Ooh, selling really came in strong there. At least a lot of selling volume. And something to note on this side is that look at on this end versus this end. Right, there's nothing to the bottom here. That means prices were pushing all the way down. If you ever see that in either direction, all the way down or all the way up. I was looking for a green candle. All the way up. This one almost has it, but you can see just a little tiny bit on the top there. But price is pushing all the way down, so strong amount of selling. But right now we're still kind of in this range. Maybe we'll. I wouldn't be surprised if it's tomorrow we see it. Honestly, I wouldn't be surprised with anything that happens. It goes up, goes down, but sometimes, you know, this might be the beginning of coming back down here and testing around the 200-day. Consumer discretionary. See, this is a real, has been real weak. Definitely below the 200-day moving average. You see this chart showing that money has been flowing out of that for a while. Down here, this is what I mean by it can stay up or stay below. See, it's been below, just kind of moving sideways below. And what do we see? This kind of made a bottom here. I mean, could redo that. Here's a bottom, lower bottom, lower low. But overall, you can see it's just been on a downward trend, and you see it got up. This is the 50-day moving average. Is this yellow one? Is it the 50-day? Yep. So it got up to the 50-day moving average, but selling volume just really pushed that down over here. So there's a good chance. I'd say there's a good chance we're going to see it go to the downside. In fact, I wouldn't be surprised if we see it retest down here around this 136 area. Volume, boom, pumped up a little bit. Industrials, same thing, sold off. This has been in an uptrend, not as strong as financials, not as strong as healthcare, but it has been in an uptrend. It's above all three moving averages, and kind of going sideways, right? If you look at it, that we basically closed right here back to where we were over here. So a little bit in this range. Look at that, boom, strong selling volume. Now we'll have to see how things are going to shake out. IWM, that's from Friday. While we're waiting for that to load, this is a reason why I love selling options. Ooh, look at that, drop down. IWM is like these small mid-cap stocks, and it's a pretty good indication of what's going on with the overall stock market. And we've had an uptrend, right? You see, here was a low, here's a kind of, it's a little bit of a lower low, but it's sort of made this base over here. So we got a low, higher low, higher low, higher low, but it's been very volatile, right? Up and down. Catching a little swing trade, you know, trade this to the upside, trade this to the downside, that'd be profitable. But like I was saying, what I love doing is selling options, because quite frankly, like I live in a time zone that it's not ideal for me to wake up at 3:30, 4:30 in the morning and try to be on top of all this stuff. I did it for a while, and gosh darn it, golly gee, it just was havoc on my health. I like sleeping, not sleeping in too late, but I got to get about 8 or 9 hours of sleep. And if someone tries to tell me, no, you only need 5 hours, you know what? Speak for yourself. Why don't you ask me how much sleep I need, and I'll tell you, and you tell me how much sleep you need, instead of me telling you how much sleep you need and you telling me, right? How about we all figure that out for ourselves? So if you can function good and your health is good on 5 hours of sleep, more power to you. If you need 12 hours of sleep, more power to you. Who cares? You know, that's what's the beauty about the stock market, is that you're not confined by this dogma of what works for other people. You can figure out what works for you. And while I was going on that rant, I'm seeing something here where we, even though it's been going up, right? We see like kind of having a tough time around this 200-day moving average. So I see like kind of a line going this way, and definitely see this like sideways in here. But over the 50-day moving average, over the over the 25-day moving average, over the 50-day moving average, but fighting against this 200-day. And what do I think might happen? You know, it's, you know, based on this, it broke above that 200-day moving average. Couldn't do it, selling off. You see the volume's been going down. It probably needs volume going up to really break through that. This is like trying to break through the roof above you without it being on fire. But anyway, selling options. Volatility can work in your benefit. Qs, boom, drop down. Look at that. You see sideways? I see sideways. Look at it. just up and here, just been moving sideways. But overall, you know, from this day around the middle of October, it's up, but not real strong, right? It's kind of going up in these sideways little things here. So the dollar, what's up with the dollar? That's still Friday. Oh boy, I tell you what, man, sometimes this takes a long flipping time to load. It's pretty boring. I pause this while it takes a long time to load. All right, it loaded. So the dollar, all right, we see it's got this little base being formed there. Maybe we have a W forming. Here's maybe not, who knows, but it's in this trading range right here at the moment. We see a little bit of uptick on the volume on our weekly chart, or weekly stochastic on this long-term chart. Money has been flowing out, and kind of in a way, kind of what happens is like when the dollar's up, other assets down. When the dollar's down, other assets up. And why is that? Well, it's not a guarantee. I don't think it's a guarantee. Some people might tell you it's a guarantee, but I feel better for myself looking at it is a potential, right? Just one indicator out of things. But why is that? Well, if the value of your dollar goes up, that means it takes less dollars to buy something, right? So a valuable dollar, a dollar that has a lot of strength, you would need less dollars to buy one share of a stock. When the value of the dollar goes down, you need more dollars to buy one share of a stock. So I get it. It's a little bit it can be a little bit confusing and difficult in the beginning to wrap your head around, but it is worth wrapping your head around if you want to be it's worth wrapping your head around since you're alive and you spend money. Like, that's just the way it is. I'm sorry to put it bluntly, but if you don't feel like wrapping your head around it, don't. Whatever. I don't care. I'm gonna wrap my head around it. If you don't want to, whatever. It's a free. Well, it used to be a free country. I have no idea if it is now. But anyways, I think it's something that you have the choice to be able to do. But so, you know, it's one thing that you could do is, generally speaking, gold or precious metals are in an inverse correlation with the dollar. So if the dollar's up, gold down. The dollar down, gold up, generally speaking. So, you know, you can kind of put on trades like that. But lately it's been seeming like the dollar down, stocks up, dollar up, stocks down, right? All this time stocks were going down. Now, since it's kind of been, stocks have been going up. But I don't know how long this can last for. It's so be ready for anything. And again, that's why I like the trading style that I do. All right. TLT. It kind of has also been playing out as this TLT, which is a 20-year treasury bond fund, ETF. It's like when TLT was going down, the stock market was going down. When TLT was going up, the stock market was moving up. Again, you know, is it set in stone? I don't know. I'm not looking at it as it's set in stone, but it seems to have been working for a while. And but you know, so maybe here's a little indication. It's probably going to pop up some red volume in a moment. You know, bonds down a little bit. Let's look at this line chart. And I don't know exactly where. Well, we can, you know, here being the beginning of it. So we're just going to line it up with that and let them fall where they may. Right? So we've been in this bear market for how long? Well, each of these different colors represents 1 year. So you can see basically at the beginning of 2022, we started this this bear market. End of 2020, somewhere in that time. End of 2021, beginning of 2022, somewhere in there. So it's almost a year that we've been in this bear market. And this is a makeshift channel of this bear market. So you can see in the past where it's broken out of this top part of this channel and then it failed. So right now we're testing that top part. Are we going to be done with the bear market? Is it going to move into a sideways market? Is it going to move into a bull market? Or is this breakout going to fail? And are we going to continue into the bear market? So what we want to be looking for, right? We're out right now. And let me see if I can. Okay. See this little W right here? Right, this is where prices kind of got stuck right in there. So it's like from somewhere between like just think about like 180 to 190. Not 180, sorry. 380 to 390. So that's kind of a good section. The first thing, I guess the first place that we could look at is it going to come back? I don't know where you count that at. Yeah, I would say the 380 to 390 is still a pretty good range because it could kind of get stuck in the sideways motion, right? It doesn't necessarily have to be a bear market or a bull market. It can be a sideways trending market. And if it starts dropping down and we start hitting around this somewhere between like the 390s, 380s, somewhere in there, if it starts getting stuck and going sideways, then maybe that's what's going to happen. But if it breaks that 390, 380, then the next point we want to kind of look at is this 376, and the big whopper is going to be right here down to a lot of people's favorite number, 357. So let's wait and see. Let's wait and see what happens. We're moving into Christmas, the new year. It's going to be light trading. There's this thing called the Santa Claus rally. If you don't know what that is, just type in Santa Claus rally. And then go wherever you want to go and start reading what's the Santa Claus rally. So it's a legit thing. It tends to happen every year. And so maybe that's gonna happen this year. Oil. We tested down here at this 76, 75, and seems to be moving back up. So if it's going to stay above 76, 75, somewhere in there, 74, if it's going to stay above this mid 70 range, then the next thing we want to see is what's going to happen around the 80, especially 81, $82 area in here. Because right now, see where prices kind of got stuck in there? You look to the left, prices kind of got stuck in there before. You see is boom, it touched it. Oh, pulled back, boom, it finally went up. And same thing, prices kind of got stuck in here. So let's see. I was thinking it's going to go back up and kind of to this range in here, the 85 to 90 range. But hey, you know what? I could be wrong. Could have been wrong. We'll see. Maybe it's going to stay down here. So right now, I'm just looking to see is this the trading range it's going to stay in. We will see. Gold. Now gold also is getting in this range bound right in here. So you have this rally up over here, pull back just a little bit, but overall compared to we kind of had this triple bottom here, right? Low, 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 all kind of in the same area. Sort of like a W. If you put that on a line chart, it would not look like a W, but and look at that. So I don't know, cup and handle. I don't know. I'm not the greatest technical analysis. I probably shouldn't be admitting that out loud during a technical analysis video, but I'm telling you what, that's why I love selling cash secured put options on stocks that I don't mind owning the rest of my life, and then selling covered call options if I get assigned, or just keeping them and collect the dividends, or do a combination of both, whatever the case may be. I'm telling you what, it takes it takes a lot of this guesswork out. You know, it's a lot easier to say, hey, I don't think I don't think gold is going to go above 1810 in the next 7 days. I don't think gold is going to go below 1720 in the next 7 days. Can I sell something on either end of there? Now, I'm not recommending you do that. I have no idea what the premiums are like, and you definitely don't want to be doing it in a futures account if you're watching this video, because you probably lose all your money because there's a bunch of weird leverage stuff or margin, and that's not something you want to be doing. But, you know, regardless, if this, you know, just looking at this chart and, you know, pretending of like looking, hey, where's support, where's resistance, where do I think prices won't go in a certain amount of time, can I make any money if I sell something out there? That's a way to do it. One way to do it, at least. That's the way that I do it. And Bitcoin, yep, you know, no shocker here, right? Been doing the same thing for a while. How long has it been doing this for? Let's go back 4 months. Yeah, it was doing it 4 months ago. Let's go back 5 months. Okay, it was more volatility here, right? It wasn't doing it as much 5 months ago. So maybe about 4 months ago it started. Around August, dropped down, went sideways, dropped down, went sideways, dropped down, rallied up kind of considerably, dropped down, went sideways, dropped down, went sideways, rallied up, dropped down, went sideways, yeah, up a little bit, but, you know, kind of like in this weird sideways movement, rallied up a little bit, dropped down, kind of went sideways, dropped down, rallied up a little bit, couldn't do it, dropped down, rallied up a little bit, kind of in the sideways grind, right? Rallied up, went sideways a little bit right here, really tried to test it out, boom, dropped down here, and here we are now, you know. So if history is any indication of what's going to happen, then we're just going to continue to steepen this 200-day moving average. Look at how this dropped down. Let's bring this back into 3 months. So I don't know, there's still like this bullish Bitcoin stuff out there. And if you haven't heard me say this before, I'm actually neutral on Bitcoin. I don't know if it's going up or down. I'm just looking at the charts and then seeing what it tells me. But you know what? There's more to price action of an asset than just the charts. If somebody starts buying a mass amount of Bitcoin, or not if for some reason all the retail investors start buying a mass amount of Bitcoin, then this is going up no matter what this 200-day moving average is. But a way to look at it right now is, see, it's testing this 20-day moving average here, right? It tested the 20-day moving average here, failed miserably. So you got to wait till this candle closes. I don't know when this candle is going to close, but it's, you know, testing that 20-day moving average. You see it pulled back just a little bit right here, and if it doesn't break above this 20-day moving average and continue to close, because look at right here. Right, it broke above this 20-day moving average, closed above it, closed above it, closed above it, closed above it, but eventually, boom, it did not close above it. Right, it's got to stay above. If you want to see Bitcoin going to 500,000, then you got to see it. You got to like reverse this. You got to see it going sideways and then shooting up, going sideways and shooting up, but it's not doing that. It's going sideways and shooting down. You know, it's one thing that's really good for Bitcoin, because it trades 24/7, is watching it to learn how to just analyze stock charts. It's really great for that. I'm constantly watching it. I think it's pretty fascinating, and I love trying to speculate on what it's going to do. Unfortunately, I live in a state that's not that free, even though supposedly the U.S. is the land of the free. Maybe it's just more free than other countries. I don't know. I haven't lived in another country. I just couldn't tell you. But you know, over here and People's Republic of Hawaii, they being whoever they are in the government, they're not letting me trade this easily. So I can't trade it on Tastyworks, can't trade it over here. I can only use these fraudulent cryptocurrency places and lose all my money like those other people. So I haven't done that. I've just been trading stocks and futures because it's easier to do. At least you know, being a peasant living here in the People's Republic of Hawaii, at least my overlords give me the ability to be able to do that. So thank you very much, rulers who rule over me. And anyways, we'll get back to you know, paper trading. That's the thing to do when you don't know what's going on, right? And even when you kind of know what's going on, test out stuff. That's what I'm doing here, right? Paper trading. Had an idea, a little more than an idea, being taught a certain strategy. It's like, hey, what the heck? Let me just throw it on 10 different stocks or 9 different stocks. Let me see what happens. I just threw it on kind of like haphazardly because it kind of doesn't matter at the moment. It's my first time doing it, you know. Throw it against the wall, see what sticks, and then start cleaning it up more. And you know, as I mentioned, trade futures sometimes, trade oil futures. I paper traded this for almost a year before I put a real trade on. So do it, paper trade, man. You'll love it. If you don't love it, then I don't know. but what you can do also is go to iofsuccess.com, download whatever stuff that I have here that might be able to help you. And about 6 days a week, I'm sending you market-related information. And pretty soon, I'm going to be coming out with a product that's going to be specifically helping in this, selecting stocks to sell cash secured put options on, stocks that would be good candidates that potentially would be good to own the rest of your life. It's not financial advice, but it's stocks that I'm particularly pursuing myself or looking at pursuing. And you can follow that journey and see what goes through my mind, see why I feel comfortable with them. And then after, it's a monthly service, so after a month, if you don't feel like doing it anymore and you feel like you got it on your own, then cancel. If you want to do it for 2 months, 3 months, whatever, you get what you need to get out of it, and then you can move on or you can stick around, whatever you like. But if you want to get a discount on that, then download something here and get on this stock list, and you'll be able to get a discount. Until then, adios amigos, and as they say in Hawaii, aloha.